Shadim Shuri. It's Monday, October 14th, 2024. Alrighty, earnings season is here, so be careful. I think this earnings season is gonna be probably the worst quarter that we have in the past at least 2 years. Uh, because for the first time in 2 years, you're gonna see negative growth, decline. I think in a lot more company than we saw in the last 2 years. Sure, going back to the pandemic, 2020 was ugly. 2021 was bad for a lot of businesses, but 2022 year over year comparison was rosy. Okay, and it was a mixed bag, of course, for some company as well. But overall, I think this would be the first quarter that I do expect to see a negative tone across the board in many sectors. I would never say all sectors. There's no such thing as everything is bad. That's just the way the market is. Okay, there are businesses that can weather the storm. All right, today let's focus on some women-focused business and some tax loss opportunities. Tax loss selling could be a bait for many of these, and it might be wise to nibble. There are three strategies that one can use to take advantage of this. Okay, first of all, LULU, ugly year. You cannot have a stock that get cut in half and nothing that is not going to have tax loss selling. Ugly. One of the ugliest looking growth story there is. There is no more growth. Okay, no more growth, no more. That being said, tax loss selling could be over, and there's in general a bounce of these bad businesses, bad stock going into Christmas year end. Okay, so make your bet properly. The three way to play these tax loss dumpster fire stocks are: you can buy the share outright, you can sell put spread below, or you can do bull call spread. That is buying a call below current price, sell a call way above to reduce the cost of buying your call down here, right? So for example, LULU. It's hard to tell for sure if tax loss is over, but I like what I'm seeing here as far as the trend. Okay, I mean, you can draw a line if you wish. Look at this line right here, a trend line. Add a drawing. Right, let's zoom in. It's definitely not random that it did this kind of move. So I like the confluence here between the trend line, another fib, confluence 50, all kind of stuff right here in the 255. So on dip into 255, I buy, okay, a few share. I might sell a put spread where 250, 240, right? That's the big gap, but I wouldn't mind owning 100 share outright below 250 on display, right? And of course, as far as call spread, buy a call, I would do something like maybe 260, 300, That's a pretty wide range, but still, there's a chance to make 20 bucks equal $2,000. You know, you spend 20 bucks or so. Instead of just talk about it, let's take a look at the potential. Um, if I was to do a call spread here, how far would I go? I would go all the way to the end of December. Well, the last option, December 20th. Okay. So I talk about 260. 260 call right now. The cost is 34 bucks. That's pretty steep. Okay. 300. So it costs 14. That costs you 20 bucks to make 20 bucks, roughly. Right? So if you buy a call for 34, you sell a call for 14, so it costs you 20 bucks. If the stock is over 300, there you go. You get your 20 bucks. Right? You understand how that game is played? Except it's an expensive game, but I like the probability. Okay, you're playing the odds here. 300, of course, you can just also just buy the call outright and benefit even more. If the stock 300 is literally why did I pick 300? Okay, 300 is like this level right here. See right there, right there. That's 300. That's the area of prior low and bounce and consolidate a little bit and then fall apart. So it could be the resistance. Okay, I'm not gonna. I don't think. Once again, the earning report coming up in a few weeks also will matter on what the stock is gonna do. Okay, make no mistake. How the guidance is. So that's why my favorite play is sell put spread for Lulu because it costs the least and it protects me on the downside. Okay, if you buy the call outright, for example, let's say for example, right, you buy it, it's in the money call, right? Sure, you can buy a 280 call for a lot less. Like say the 280 call is like $20. Can this thing drop and stay below 280? Yeah, absolutely. Okay, drop hard if earning is super nasty. Okay, it can go back way down to 250, and then you sit there and praying that you get back to 280, 260, just to break even. So nah, I'm not. Well, if you pay $20 or more to buy a 280 call, your break even is 300, right? For a call. So yeah, it's outright buying a call at 260 ish, sell put spread at 250 is the right play for me. I'm not saying that other people should do a call spread. I'm just giving you the options. ULTA. Doesn't matter if Warren Buffett bought it. Tax loss is tax loss, right? You can't have a stock that just get crushed like this and not face tax loss. I do think the bottom. Same thing here. I'm not saying I can never say the bottom is here with any certainty, but I like ULTA here. Selling a put spread at the gap fill is not a bad idea. Nibble a few share at the 340 level is not a bad idea, and then buy more at the gap fill, or just outright sell a put spread down there at 330 or 332.5, however you want to pick it. Okay, I would do a 325. No, I think doing a 325, 320 put spread is about the easiest lunch money. It's a no-brainer. It's easy to do. Now, sure, you can do a put spread higher, but I would have an order in to nibble a few share right there at 340-ish. Okay, 340-ish. Right now the low there is 342. So yeah, put in an order at 342 in case it come down there. But selling 325, 320 put is not hard. If that does not have enough juice, then move it up to 330, 320 put spread. Estee Lauder. I put it in here just to show that it's also prime candidate, okay, to do so. I like it the least out of what I'm showing so far. I'd rather buy ULTA than Estee Lauder, but if you prefer to buy the specific, instead of buying the company that sell all the makeup, you can buy the specific provider. Same thing here. You want to do a buy order around the 89-ish or 87, the gap fill, not a bad idea. Right? Not a bad idea to do a put spread 87, 80, do a tight one. I would say do an, if you want to play safe, do an 87 or 85 or 86, I mean, even 85 if you want. 82 would be the bottom spread. Okay, so like either 86, 82, 85, 82, or 87, 82. That would be the choice. 82 would be my other portion of the put spread. You know, but yeah, it's here. Okay, opportunity is here for the brave and bold. Last is my favorite of the group. I had plenty of exposure here. I'm attacking this on all three prongs. I'm adding share. I saw a bunch of put spread already. I also bought a call spread, and I would likely buy another call spread, like something like a 105, 140. So yeah, I like the call spread here. Let's see what the cost is. Where is the trade? Let's go out. December, okay, December 20th as well. Call 105 is $17-ish. 130 is $7-ish. Okay, so roughly $10. I like that much more than the other options, right, that I showed you before on the other stock. Here it costs you $10. And potentially, you can double your money. Okay, but I like the option here. In fact, if you want to do, and you can play around with other, but I would definitely do a call in the 105, 100 range. Now, how greedy you are as far as selling the call above, that's up to you. Okay, but to me, risking $10, which is $1,000, right? Because if an option costs, if a spread, a call spread costs you $10, then that means it will cost you $1,000. Cost me $1,000, and I have a chance to double the money if we get to 130. Because of or more. Actually, no. If we get to 130, I actually made 1,500 because think about it. 105. The call spread costs $1,000. That means that the break even is 115. So if we get to 130, yeah, I make 1,500. Okay, so I like it. It's a better return than the other play on the other stock. And as always, you can always get greedier and sell the call way up there at 140. But for now, 130 is okay because sure, the 50 is gonna come down. It will come down hard. Okay, it's gonna come down into the low 120s shortly. But I do expect it the big push to break it. But I'm selling put spread down here as well. All right, mine is way down here. My put spread is like at the 52-week low. That's about as far as I can do it and still get $20-$30 kind of premium. So I'm doing a three-prong: buying share, sell put spread down here, and buying call spread up there. That's it for today. Thank you for watching.